If you're watching the news, especially when it comes to oil demand, oil prices, oil news, you would assume that oil demand is decreasing, oil output is increasing. We have plenty of oil. Oil prices are going to be flat, possibly declining. And that is so far from the truth. There's so many lies swirling around oil, okay? And so if you look at the recent report by JP Morgan Chase here, JP Morgan explains why oil prices could hit $100 this year. Crude oil prices could surge to $100 per barrel the coming year as there are diminished incentives. Okay, now what they're talking about is the fact that oil prices are $80-something a barrel. Yes, but because of inflation, $80 a barrel is more like $55 a barrel, and shale oil is the most expensive barrel of oil to produce. Now, during the times of Trump, when you had the shale revolution, you had banks that were pro-oil, investing oil. That was before the whole publicity stunt by the left pushing pushing the narrative that oil is the new cigarette, it's evil, it's causing global warming, and we need to make changes, so we need to go green. Okay, before that negative incentive and all of a sudden all the banks became woke, you had a tremendous amount of capital flowing into shale. Well, we produce oil fields that would take a decade and months because of the America's ability to print money, okay? It wasn't drill, baby, drill. It was print, baby, print. And they used some of that money to drill for oil. Now, because of that, we produced our oil too quickly, okay? You look at Saudi Arabia and Russia, these other countries that are rich in oil, they don't just produce all their oil like we do in America. America, we flow it as fast as we can. We don't try to save it, okay? So we produced way too quickly. We grew too quickly. We gave too much respect to shale, where shale is the fastest declining asset in the world. It's the most expensive barrel of oil to produce. Now, we produce all of our tier one assets from George W. Bush to Obama to Donald Trump. Now we're in tier two assets. Now it's even more expensive to produce a barrel of oil, okay? So even though that oil prices are $80-something a barrel, you add in inflation, and then you add in the fact that we're in tier two assets. Now the incentive to drill is very low because it's not profitable for the shale industry, okay? And most of the money being spent is in shale, okay? Because the biggest companies are in it. Now, you look at the rig count. The rig count is very low. It's dropping, okay? Because there's less incentive to drill. And then on top of all of those things, you have oil demand growing. If you look at, this is the most recent OPEC reports here. This is in 2021, our demand was 97 million. In 2022, 99.7. And in 2023, our demand was 102. First quarter of 2024, 103. And by the end of this year, we're expected to be at 105 million barrel a day demand. And by third quarter of 2025, we are expected to be at 107 million barrel a day demand. Okay. Now, with the fact that our demand, now this is not mainstream information. If you listen to the mainstream, they'll tell you, hey, we have plenty of oil. Demand is decreasing. Green energy is replacing it. That is so far from the truth. It's a complete lie. But the reason why oil prices are not fundamentally, reason why oil prices are not aligning with the truth of what I'm saying is for the simple fact that oil prices are being manipulated, okay? Now, if you look at the historical futures, okay, if you look here, okay, so beginning in 1995, total trades were 14,951,217 and it has all the futures, Brent, gas and oil, Brent, gas, oil futures, options overall. So every single trade done in oil and gas on the Brent and WTI, okay? So 14 million total, and then in 96 it increased to 15.5 million, and then it dropped to 14.7 million in 97, okay? And continues to grow, 23 million in 99, 25 in 2000. In 2001, we were at 26 million trades. In 2002, we're at 30 million trades. And we continue to increase, 33 million, 42 million. Now, all of a sudden, in 2006, we jumped 104 million trades on the paper market. Now, what I'm talking about here, this is the volume of trades on the NYMEX and on the ICE, Intercontinental Exchange, European Exchange, and the New York Stock Exchange. And this is the future. They're betting on oil prices going up or down. And instead of trading physical barrels, they're trading paper. Okay. And so this is what controls 80% of the price of crude. 20% is WTI, West Texas Intermediate. Most of that oil is used. That price is used if you sell oil in the U.S. And then Brent crude is international. If you're exporting, importing, buying and selling amongst OPEC and so on and so forth, that's controlled by the ICE, Intercontinental Exchange. Okay. And so then we jumped up to 152 million, 165 million, 217 million, 268 million, 281 million, 315 million trades, and then 393 million, okay, in 2014. And all of a sudden, in 2015, we jumped to over 900 million trades, okay? If you look here, we jumped to 901,659,000 trades from 393 million. We more than doubled the amount of trades, okay, in 2015. And so I have a point to all this, okay? And so then 973 million the next year, 1.1 billion, okay, almost 1.2 billion, almost 1.3 billion, 1.1 billion, 1.142 billion, 1.2 billion, 1.1 billion, 1.2 billion, okay? And so far this year, we've traded 768 million, which is 100 million more than where we were last year, okay? So we ended 2023 with almost 1.3 billion in volume trades in oil. Now, why does that matter? Okay, here's the deal. If you look at historical prices, okay, in 1973, we had an oil embargo. At the time, it was OAPEC, which is the Organization of Arab Petroleum Exporting Countries, okay? Because of the Yom Kippur War in America supporting Israel, they cut us off from oil, along with some other countries. Oil prices went from $3.56 a barrel to $10, okay? Tripled in price, okay? I mean, at the time, oil demand was 57 million barrels a day, okay? And then in 1979, the overthrow of the Shah of Iran and the establishment of Islamic Republic under Ayatollah led to a major disruption in Iranian oil production and exports. Oil went from $15.85 a barrel to $39.50. Oil prices more than doubled. And at the time, oil demand was 62 million barrels a day. Okay. The Iran-Iraq war increased prices from the 1991 Gulf War. Remember that under George W. Bush? We had in 1990, actually George Bush Sr. In 1990, we had the Iraq War, invasion of Kuwait, August of 1990, and oil prices went from $15 a barrel to $39, okay? More than doubled, okay? And at the time, demand was 67 million barrel a day, okay? Now, and then you look at 2011, the Arab Spring, which began 2010, led to political instability in several oil-producing countries in the Middle East and North Africa, disrupting oil production, causing prices to go from 80 to 110, okay? And at the time, oil demand was 89 million barrels a day. Now, here's the deal, okay? You look at everything that has happened in the Middle East, all the wars that have broken out, for instance, between Russia and Ukraine. Saudi Arabia was bombed by the Houthi rebels. Houthi rebels are attacking ships in the ocean. You look at the instability in the Middle East rising, the Israeli war with Iran, with the Palestinians, okay? In the past, oil prices would have potentially doubled, but you didn't see that increase. And that's because when you have companies that control the markets that are making during a time when trading volumes were 100 million and now they're in the billions, they can control the price of a barrel of crude, and they all submit to who? ESG, which is a United Nations organization. ESG is anti-oil. They hate oil. They're giving you an ESG score. Basically, hey, if you use oil, you're destroying the planet. So, yeah, your credit score is going to have to be dropped. Or if you're not hiring diverse workers. I mean, you look at what happened to who on stage, almost getting his blown off. I mean, it's a joke, guys. And so this is what's pushing this is what's controlling the world. ESG mindset, the woke banking system. And and oil demand is growing. And if you look, I want you to, here's my whole point. If oil demand continues to grow and we're not doing anything to incentivize the oil and gas industry, what do you think is going to happen in the future? Naturally, fundamentally speaking, oil prices will go up. Okay. I want you to watch this video here. I find this video, I'm not telling you this is the truth, but this is and I don't like this gentleman that's speaking, but he's very intelligent. Okay. He doesn't just say anything. Okay. Let's listen to what he has to say.
Has actually broken down, only we haven't quite recognized it. And so you need to create a new one. And this is the time to do it.
In the United States, how worried are you about the budget deficit and maybe about the possibility of inflation?
Well, certainly a decline in the value of the dollar is necessary in order to compensate for the fact that the U.S. economy will remain rather weak, will be a drag on the global economy. China will emerge as the motor replacing the U.S. consumer. And of course, it's a smaller motor because the Chinese economy is much smaller. So the world economy will have less of a motor. So it will move forward slower than it has in the last 25 years. But China will be the engine driving it forward, and the U.S. will be actually a drag that's being pulled along through a gradual decline in the value of the dollar. So there would be a slow decline in the value of the dollar, a managed decline. And that would be the adjustment that it needs to be accomplished.
So there are two.
So what he's saying is that the plan is for China to replace America as the global superpower. And now, do I believe that China is going to replace America? Well, if America continues the decline that it's on, I mean, if you look at now, I truly believe that during this time when the economy slows and the decline in the power of U.S. currency, I think you're going to see the value of oil increase. Okay, and I'll explain that as well. But if you look at so Jerome Powell said that they're going to increase rates. Well, they're expecting them to start increasing rates come September, okay? So if you look at here, mortgage rate forecast for the end of 2024 differs slightly. Realtor.com expects an average rate to fall to 6.5. Fannie Mae is expecting 6.7. There might be more breathing room in 2025 too. Major forecast rates, Wells Fargo, APRs to average 6% first 3 months and expects a rate of 5.9%, okay? So they're expecting to starting to drop rates come September, okay? Now, if they drop it to 6.87%, a mortgage at $420,800 and a 20% down payment, their payment would be $2,210. And then they drop it to 6.7, 6.5, 6, 5.9%. So they're saying that you're going to save $200 a month on a $420,800 mortgage with a 20% down payment by the time we get to 2025 with multiple rate cuts. That to me does not incentivize a major turnaround in the American economy. Okay, and I truly believe that we are with a $35 trillion debt, and we're having to increase the debt ceiling. How do you fix that problem? You can't. You can't unless our GDP, some miraculous way, we invent a new technology that causes everybody to buy and our GDP doubles. Our GDP has potential to increase, yes, but not to match our spending, not to match how much debt we have. The chances of that happening are near impossible, okay? So you're seeing a decline in the U.S. currency and the value of the U.S. dollar. And with the BRICS organization, and here's the deal, back to what George Soros was saying about China. China is looking to replace America as a world superpower. And that's why China is working with Russia, Saudi Arabia, these Middle Eastern countries with OPEC to form BRICS. Why? Because you can't, 1 and 1 always equals 2. You can't build a superpower or grow a country or an economy without cheap, abundant energy. While everyone else is going woke and going green, quote unquote, which isn't true, China's increasing their fossil fuel footprint. They're increasing their oil developments. They're increasing their fossil fuel plants and so on and so forth. They know that green is, but they'll sell it to us because they have a lot of green technology, okay? Because there's a lot of suckers in the world, okay? And so bottom line, China is cozying up to these Middle Eastern powers, scratching their back and they're scratching his to make sure that the relationships are forged so he knows he's going to have cheap, abundant oil. If you have any chance at growing, you have to have oil, period. That's how America did it, and that's how they're going to do it, okay? You look at China's demand. If you compare, we use 922 gallons of oil per capita, okay? So in other words, we use 922 gallons of oil per person, okay? And then where China is 139. So in other words, we use 50 times more oil than the average Chinese person, okay? If we took 50 and multiplied it times 12.791 million, that'd be roughly 83 million barrels a day. If China grew and started using more oil, they'd be using 80. If they came close to us, they'd be using 83 million barrel a day. So it wouldn't be crazy if China added additional 5 to 10 million barrel a day demand if their economy began to grow. India would follow. Okay, their demand would be over 80 million if they're using as much as America. Okay, their demand is growing. The world population is growing. The demand in emerging markets is growing. America, we peaked demand long ago. Our demand is not going to grow. Even if we lost a massive amount of oil demand, the most oil demand we've ever dropped overnight was during COVID, and it wasn't anywhere near what everyone thought. Okay, and we're flatlined as far as demand. Our demand is actually growing, but the Middle East demand is not being talked about. Okay, we're expecting to be at 107 million barrel a day. And there's no incentive to expand development. Our world oil reserves are at the lowest they've ever been. The rig count in the U.S. is the lowest it's been in a long time. There's not enough rigs. Our tier 2 assets are being developed. They're producing less oil for each well that they drill, but they use technology to increase the amount of oil coming out of each well. So they're squeezing more oil out of a well bore, but it doesn't increase the shelf life. It decreases it. In other words, the declines are faster and they're getting the oil quicker. So we're able to maintain these numbers, but with wells that are lesser reservoirs, less quality reservoirs than their predecessors, and they're using technology to get them to produce faster. So it's putting off the false idea that America has plenty of oil. That is so far from the truth. Okay, the massive oil discoveries has increased substantially. All right, and this is exactly where the Middle East wants us. I truly believe that the plan of BRICS, at some point, they are going to cut us off from oil, like they did back in the 70s. Another oil embargo. History repeats itself. In the 80s, Saudi Arabia flooded the markets with oil, and then just after COVID, Saudi Arabia flooded the markets with oil. History repeats itself. And I truly believe after Trump gets in office, that's if he does. If he wins, I think he is. I think that's when the Middle East is going to, I think that's when we're going to see the wars in the Middle East escalate. And these fundamental prices of oil at some point are going to break because the BRICS is tired of, you look at all these numbers, 1.2 billion trades in oil controlling Saudi Arabia's oil price, controlling Russia's oil price, controlling Iran's oil price, the UAE's oil price by these large woke companies controlling their oil. And the only way they know to control the price of a barrel of crude is by forming BRICS, devaluing the dollar, and cutting off the West from the very product that they act like they do not need. In their pride and their arrogance, they say, hey, we have green energy, you could have your oil. They are lying, and behind the scenes, they are shaking in their boots. They know they need oil. Oil has been disrespected by the news, by the media. It's been downplayed. OPEC has been screaming on top of the mountains saying, hey, you guys are in dangerous territory. You're ignorant. You're producing your oil too quickly. You're getting rid of your oil supplies too quickly. You are going to be cut off from oil if you continue to de-incentivize the value of oil, the development of oil, and we have no choice but to cut you off from oil to teach you guys a lesson, and also for the fundamental price to finally go back versus these 1.2 billion trades by people on the New York Stock Exchange and ICE, Intercontinental Exchange, controlling prices that are controlled by the ESG. They're tired of it, and I don't blame them. All right, guys, I'm Sean Pruitt, president of Kingdom Exploration. If you like this channel, please subscribe, and we'll talk soon. Thanks.